To understand the impact of the Fed rate cut, imagine this situation. There is a building, and inside that building there is a big tap, the biggest tap. When this tap is tightened or loosened, it controls the flow of water in the entire building. Likewise, the Fed Reserve is the biggest currency tap in the world. Now, this tap has been kept tight over the last 2 years, and now there is a chance that it might be loosened to some extent. And that's it. Bottom line is, as the rate cuts happen, the cost of borrowing goes down, the value of dollar goes down, and the implications are not confined to America. Rate cuts impact the global financial markets. Hello, my name is Abhitav Trivedi and you watching Mint Explains. Let us take individual assets and see how will the Fed rate cut impact these commodities. Let's start with gold. Now, the safest hedge against inflation and the world's original currency. Higher rates are generally viewed to be a drag on gold since they make fixed income investments like bonds more attractive. Although historically, this has not always been the case. But gold is used as a hedge against inflation, which can be pushed as rates go lower, and investors also buy the commodity in times of market stress. Let's come to oil now. Now, prices of oil, which are traded in dollars, receive a boost whenever there is a rate cut. This in turn stimulates the economy and boosts demand of the commodity. As we are seeing, international crude oil prices are on upwards trajectory as speculations are rife that Jerome Powell will make the markets happy with the rate cut. Now let's talk about equities, the share market. Well, the share market, whenever there is a rate cut, gets extremely delighted and reacts positively to the rate cut. Globally, equities receive a boost, and in this scenario, the present one where we are in, stocks of big tech, IT and banking sectors are set to surge in case the Fed rate cut is announced. Let's come to the bond markets, the debt market. Now, since the cost of borrowing gets cheaper post the rate cuts, US bond yields go down, and therefore investors and global FIIs start pumping money into emerging market bonds where yields would offer better returns than the American market. Let's move on to crypto, the last one. The very asset which was designed to bypass central banking is not averse to Fed rate cut impacts. The rate cut would likely boost risk assets including Bitcoin. But the bottom line is that while markets are confident that the Fed will kick off its cutting cycle on Wednesday, there is also a considerable uncertainty over how far and fast will it move over the remaining 3 meetings this year and into 2025. When the Fed started cutting rates 2 years ago, it went from almost 0 to 5.5% in less than 2 years. So much so that it rattled the global financial markets. So market experts believe that this time any rate cut by the Fed should be gradual and not a knee-jerk implication. The market is divided on whether the Fed would reduce cut by 25 or 50 basis points. In few hours, the decision would be announced, and we at Mint shall keep you posted with every update as far as Federal Reserve and the rate cuts are concerned. See you soon.